This is Founders Games Metaverse Rounds.
Welcome to the Founders Games.
The biggest growth stage challenge on the planet with $6 million award. The collective intelligence of 250 VC investors evaluated over 3,000 applications of growth stage companies. Only 60 made it to this third round.
Thrilled to be here. So great to be a part of Webital.
All of them are superheroes. They are saving the future of the humankind by generating social and environmental impact through their exponentially growing innovative businesses. Welcome to the better future. Founders Game starts now.
Hello and welcome to the third round of the Founders Games. Today the vertical is FinTech and DeFi. Third round is a special achievement for all of the founders you're going to see, and definitely it will be a great opportunity for them to hear our feedback and the feedback of some phenomenal jury members who are today here with me. Without further ado, I would like to introduce the four of them who are coming from all around the world here with us. I would love to start with our first jury member. He is with us. He is the co-founder of IQ Capital. His name is Max Bautin. He's a member of the Invest Europe Venture Capital Council since 2015 and was selected to the board of 2021. Max, what should we know about IQ Capital? Such a pleasure to have you with us.
We are a very active deep tech and fintech fund, writing checks at seed and Series A, focused on the UK and Europe.
I have the pleasure to welcome Aleksandra Laska to the jury. She started her career at Almaz Sachs, and she went to co-found mobile payment platform, followed by a stint in the VC, an angel investor before joining Redalpine. She set up US operations for a Swiss multi-million-dollar robotic software company. She's currently a partner at the European Early Stage Venture Capital Fund, Redalpine, and I would like to hear actually more about.
Hi, pleasure to meet you. Thanks for having me. As you mentioned, I'm a partner at Redalpine. We're a Zurich-based European VC fund. We have recently opened an office in Berlin as well. We invested seed and Series A stage. We are pretty agnostic when it comes to sectors, but some of the more well-known names within the fintech space are N26 and TaxFix, two companies that we backed from a very, very early stage.
And now I'm honored to welcome my dear friend, Dr. Sasha Galitsky, who is an internationally well-known inventor, entrepreneur, and of course, prominent member of the VC community. He's co-founder and managing director of Almaz Capital. Sasha, such a pleasure to have you with us. I would love to hear a few words from you about the most important thing about Almaz Capital.
Almaz Capital is a cross-border fund between Silicon Valley and Europe. We targeted mostly for entrepreneurs in Central Eastern Europe who would like to realize them Silicon Valley with successes over there. So we have office in Berlin. So by this way, it is two our major offices, but we distributed over the different cities of Europe. So we are Managin fund. It is fund number 3, and we in the middle. So we are happy to put money.
Thank you so much, Sasha, for being with us. And I would like also to extend our warm welcome to Marcin, Laczynski, a partner at Next Road Ventures. He's a business developer with 15 years experience. And I would love to hear more about Next Road Ventures. Marcin.
Nice. Thank you for having me. It's a real pleasure. We are a Warsaw-based early stage generalist. We are usually investing at quite early, so pre-seed and seed. We bet on Central and Eastern European founders. Again, great to be with you guys.
Thank you so much. With this said, just a few words about Webital Investment Network that I'm representing. It's a publicly listed investment vehicle. It's evergreen. Our usual tickets are between 500 and 2.5 million. We extend. And the beauty of Webital is that we represent a global network of opportunities, and we help both syndication and supporting through our global network of corporate partners. And WIN is here to support the award of the Founders Games.
Thank you, Dr. Russev. As your AI co-host, it's my pleasure to introduce the rules before we move on to the first founder. The jury shall evaluate the top companies in this vertical and shall select a winner against 6 equally important criteria. 1. Business model scalability, market adoption, and timing. 2. Uniqueness of the idea. 3. Team capacity. 4. Funding and financing. 5. Leadership and personal qualities. And 6. Impact factor. Is the company generating social and environmental change? Each criteria brings up to 10 points, so the maximum a company can get from each jury member is 60 points. Only 5 of the semi-finalists shall reach to the final round and win a share of a $6 million award. Let the Founders Games begin.
Participant number 1.
Let's see who is in our backstage.
Hi everyone, Gaston here, co-founder and CEO of Pomelo. Thanks for having me.
Gaston, such a pleasure to have you with us, and allow me to put your magic avatar, and we're all waiting for you downstairs at the stage.
"60 seconds, pitch starting now."
Hi everyone, I'm one of 3 founders and Endeavor entrepreneurs. We've been doing fintech in Latin America for over 15 years now. We built one of the largest neobanks and also the largest wallet in the region, and sold a couple of companies as well. We started this company out of our own frustration. Infrastructure has been the single largest pain for us. It takes about 2 years to launch fintech in any given market in Latin America, because the infrastructure is old and local, and we wanted to make it modern and regional. So that's why we're building this brand new financial services infrastructure for Latin America, starting with the first truly regional and cloud-based processor. Effectively, we allow companies to launch and scale fintech and also crypto across Latin America in a fraction of the time. And we charge a minimum monthly fee that operates as a SaaS model, and also a take rate on that transactional revenue. We usually sign 3-year contracts, and we've been positive gross margin from the very first day. Why is this important? Latin America is a massive region. It has almost 20 countries, 650 million people, 2 times the GDP of India. But however, it's still a cash-based economy. We have markets with up to 80% inflation, and 50% of the population have no access whatsoever to digital financial services. So we really need to make any structural improvement in financial services to take the region to the next level.
Ready for Q&A.
It seems to me that your target customer are fintechs. I don't know whether I understood that correctly. And you probably start them off quite young. Is your infrastructure capable of growing and scaling with the customer as they grow and scale and need more support?
You're absolutely right. Our target customers are mostly, I would say, tech companies. 50% of our customer base are fintechs, then 25% crypto companies, and the remaining 25% embedded finance, which is a theme that we are seeing more and more. We understand that all sectors are going to do fintech, and obviously some companies will do very well in fintech regardless of what their core business is. And we also acknowledge that the winners are going to be regional companies in Latin America. That's why the regional aspect lies at the very core of everything that we do. In terms of infrastructure, infrastructure has been built and is led by people who previously worked at publicly traded companies all the way from the ground up, since they were very early startups. And of course, we sell reliability and we sell trust. And so the infrastructure and how scalable it is, it's our single most important thing. And the mere fact that we work barely with 6 unicorns also means that we've been through a lot of technical due diligence process, because we need to be up to their standards. So we are very proud that in a short period of time, we've been able to capture some of these very large Latin America.
How customers you have right now, actually?
We have 75 customers. 90% of them are tech companies. 50% of those are fintechs. 25% are crypto companies. I should also mention that within the crypto card market, we have over 50% of market share already in Latin America, which means that all these crypto companies that have been issuing cards lately recognize that there's a new default, a new better way to run their business on our infrastructure. And then the remaining 25% of our customer base are embedded finance companies, such as delivery companies and so on and so forth. And out of those, they really range from seed stage companies that start building on top of Pomelo from scratch to pre-IPO unicorns. As I said, we're working with 7 unicorns in Latin America that are doing the entire region with us and have chosen us precisely because they can find in Pomelo one and only fintech partner instead of having to integrate with literally 15 to 20 local incumbents. That is usually how things were done up until now, and it would require about 5 years to tackle 4 or 5 markets in Latin America, which is essentially the big pain that we felt ourselves as found.
Yeah, but it doesn't matter you work with unicorn or not, since you charge only 100K per customers, and I understand. And actually, how many customers you have in your pipeline and will close in 3 months?
Yeah, Doctor, actually it does matter because 100K per year is the baseline contract. So that's a minimum guarantee that we charge. And then, of course, as they have more volume, then the contract starts to expand. So for instance, right now, as we speak, we have a couple of customers that are already producing 5 to 6 times the volume. So that means that that's $500,000 contract when we actually signed an original contract for 100,000. So the contract expansion part, which comes through volumes, which of course is something that is very characteristic of the unicorns because they are large and established companies, plus their geo expansion is actually a source of revenue expansion and contract expansion for us. And that's why I'm stressing the importance of having or landing these large accounts, not only the existing ones, but also the ones that are being incubated and are going to be the future win. In terms of your second question, we're closing customers at a ratio of 10 customers per month. So to your point about the next 3 months, we would expect to close another 10 customers. This year, we started with 15 customers. We already have almost 80 customers, right? So that's kind of the momentum that we're seeing at the moment.
Who do you see as your competitors today and more importantly tomorrow? And how do you make your competitive advantage sustainable?
Yep. Yeah, so today, if you look at the actual volumes in the payments industry in Latin America, we're talking about an industry that has literally like 1 billion cards and $1 trillion in volumes transacted. 90% of those volumes are sitting within local incumbents, right? So these are historically bank-owned processors that have been almost monopolizing the entire business for a decade. And that has started to change, right? So from a volume perspective, they are our largest competitor. Now, of course, there's global companies that are interested in Latin America, and some of them have been entering the market. Usually what we see is that it's very hard for them to prioritize any given market from a product development perspective. I mean, if you are interested in Germany or Japan or the US, it's very unlikely that you will develop local features and localize your product for Colombia or Ecuador, for instance. So I think that's our biggest differentiation with them. And then of course, there are some local competitors, but they are very, very centralized in Brazil, which is obviously the largest economy. But Latin America is a lot more than Brazil. And as I said before, what we're seeing and what we have seen in the industry for the last 20 years is that the large winners in the region end up being regional companies. So Brazil also falls short at some point. What are our key differentiators? Well, first of all, when I compare ourselves against incumbents, it's obviously modern technology, right? It's a 2022 technology as opposed to 1980. But most importantly, is regional technology. Historically, if you had to scale a fintech, which is essentially what we did before throughout Latin America, you would have to go market after market, looking for negotiating and integrating with a bunch of local incumbents before you were even able to launch. And that's a process that usually takes about 2 years per market. With Pomelo, you do just one integration and that untaps the entire region for you. So that speed It's key because all these fintechs and cryptos are racing their B2C races. So they're competing, and so speed for them is a massive asset. New technology, regional capabilities, and of course more transparent pricing are key differentiators.
How to navigate through local regulations?
It's very diverse, and that's why LATAM is very difficult. We work with regulators to be compliant, and that's why we've been filing, and we already have some licenses in the different markets. Our core value prop is to localize and to be uber local in every single market, and that's why for us it's extremely key to be friends with the regulator and to partner with them.
I took a look at your website. I know what you guys have currently on offer, but could you tell us more about maybe the vision and long-term where you want to be?
We started with card issue processing because that was a very clear wedge. Fintech companies are using cards to bring financial services to more people in Latin America, so we saw that firsthand. However, that's only the beginning. If we think how the the infrastructure will shape in the future, you have issuing, you have acquiring, you have different rails, cards rails, crypto, bank-owned systems like Pix in Brazil, and then you'll have crypto accounts and fiat accounts, both on the consumer and the merchant side. So that's the entire pie and the long-term vision. So we're only starting with issue processing.
As founding team, what do you think the key elements of the culture that you're trying to grow are, and how do you what elements do you still feel you would need to improve on?
Culture is very high in my own agenda. It's the CEO's agenda, it's not HR's agenda. In fact, we are actively working on culture with an external facilitator, and the entire company has gone through the LSI test if you are familiar with it. I think for us, the biggest challenge at the present time is that we represent and we are based in 5 different markets, and there are cultural differences between the different operations. So we need to find ways to find commonalities and bridge the gaps that we have. And then also because our company has so many people that have been doing fintech in Latin America for so long, we need to learn to be more vulnerable in the sense that we are not necessarily super experts for the long run. We have a baggage and that's useful, but we need to stay very humble moving forward.
How do you create a better world in terms of the SDGs?
I had the opportunity to live in 6 different countries, and I decided to come back to Latin America to work on this, which is a structural issue, right? Latin America has more than 300 million people that have no access to financial services, with massive inflation, like literally on the 80%, and they're losing money every single day. This is as key as education or healthcare. If we don't get financial services infrastructure and therefore the entire industry right, Latin America is not going to progress as individual markets or as a whole as society, right? And so this is the magnitude of the problem, and that's why we all have decided to be here in our home markets to tackle this problem for the long run.
How much you raise right now, and how you used before, and how we will use this money, and how many people you have as a team?
Management team. Yeah, it's 7 people, 3 co-founders, and then 4 other members of the leadership team. The company has 305 people, 200 of which are product and engineering. We're actively not raising capital. We have actually a clear path to profitability already, but we do believe that we're going to raise growth rounds starting next year. We're very focused on building a structural business. Our economics have been positive from day one. Our gross margins are already close to 30%. And so that's our focus right now. So if we were to raise additional capital, then it would go to the bank accounts and continue to execute the exact same plan that we're executing at the moment.
The moment of truth. Direct feedback from the jury.
The founding team seems to be absolutely stellar. I looked at your profiles before this session, and a super impressive track record from all of you. Really great growth over just 1 year from what I understand, and super exciting. I think the one thing that I would be intrigued by is how you manage to differentiate yourself long term when you see others come in that are maybe not incumbents and not traditional players, but more technological companies. And I would love to see how you can maybe increase the lifetime value of any customer on the not volumes side of things, but more the SaaS fee. I think that would be quite great to understand how you plan on increasing it as your customers increase as well and have more capability of paying, I guess, beyond just the volume part.
Very impressed with what you have achieved so far. Almost, delighted that you decided to take part in the competition, because clearly you are busy executing and you're fundraising. A little bit echoing from my perspective, as you're proving to the world that this is a lucrative market opportunity. There will be others that will try to emulate what you're doing, and it's kind of trying to project for perhaps other markets as well, which we didn't ask that question, but I'm sure you have longer term plans to expand both the product and the geography. So yeah, just very impressed. Great.
Keep up the good work, basically. I mean, here, I don't think I'll be able to say more than Mats and Aleksandra. Actually, from my side, the only thing I was missing is actually a bit more information about your competitive mode, actually how you're building it. And the other thing is more info on your growth or expansion playbook. That's something I would definitely like to learn, because I think that LATAM is basically, that's the first step of your journey. I can see other places around the globe where your playbook could be replicated. So I would really love to learn a bit more how you see, the mid to long-term future.
I like what actually was achieved during this time. So for me, it is an interesting ratio of capital and spending. And it is congratulations that you managed such an amount of team and pretty lean. From perspective of staff, it is very important to pay attention to roadmaps. In competition, it is about roadmap. What service you will bring and what more new services you will bring to your customers, that they will be sticky with you. So it is what needs to be at this time, not to be overwhelmed by growth and spend time just more and more, but quality of service, I will say.
I'm truly honored to have founders like you being part of the Founders Games. Obviously not for the $6 million award, but because you are truly making a real change. And I might kindly disagree with some of the thoughts I've heard here from my fellow jury members. I think as a general, your approach to the market and to the continent gives you unfair competitive advantage as of today. So you're really in a great path of growth, and very excited about where you're going to be in the very near future. We are actually looking forward to see you raising your next round and further increase the growth. And even though now is not the best time for a fintech company to raise, I think with the way you work and the way you do it, my feedback is that most probably you will have very few challenges and much more opportunities. It's time to see one anonymous scoring. Great job.
Participant number 2.
Let's see who is in our backstage.
Hello, my name is Jacek Figura. I'm commercial officer of Billon Group.
Jacek, it's time for us to give you the superpower suit, which will take you directly into our metaverse. We are waiting for you at the stage.
"60 seconds, pitch starting now."
Billon is a group of passionate people like yourselves that have created our own blockchain and let's call it some layer 2 user experience solutions to make the tokenized economy and metaverse adopted by the enterprise world. Tokenization and digital cash will soon enter into the financial regulated market as well as to other enterprises. No question about it. The big bang is still in front of us. MiCA regulation in Europe will pave the new reality possible And also, it will give an experience to the United States and other markets. We have gained at Billon an experience from our small and large customers and partners. Just to give one example, Tauron is the largest Polish energy provider, and they decided to use blockchain and to implement a kind of blockchain-based document exchange platform. So that is one of our solutions that we have developed. European Commission has contracted us to build a European-wide blockchain for one of the possible use cases, which is a digital product passport. It is part of the EU taxonomy and the EU Green Deal to actually help save the environment and trace the CO2 emission across the lifetime of the product. We are an experienced company leadership team, 5 people within the management, with a diverse group of 70 plus professionals in place, majority in Poland, but dispersed also in the United States and in the UK.
Ready for Q&A.
When you're speaking about that digitizing of economy, actually, what do you mean? What will be first step?
The first step is to implement a backbone for the metaverse or for the tokenized economy. A backbone, which means a combination of number of different blockchain technologies working in the interoperable way in order to transform the current internet into something which I call an internet of value and trust. So that I don't need to have the intermediary and I don't need to have a solution to actually keep the custody of my ownership. All of my assets would then be, let's say, stored under my own custody. My assets like my identity, my assets like my national currency, my assets like my documents that I sign, or the data that I care the most.
It is clear what you try to do, but how you will implement it. It is the most important question, like what's the first step you need to achieve?
There are a number of achievements we've done so far. We've signed partnership deals with good companies. FIS, the American-based company, has already implemented our platform into the modern banking solution, which makes this a very good next step into the core banking systems. Polish Credit Scoring Bureau is another example of our partner. They have built the solution to actually exchange the data and documents between financial institutions and the individual customers to increase the trust and immutability of this process and to actually make this legally binding. We have other partners in the educational market. We have a partner in the energy market. So we are driving through partnership. But before this partnership can be very productive, we do the implementations ourselves with selected customers. Like I mentioned the Tauron case, or I can give the Raiffeisen Bank International case, just to give an example, in order to show and motivate the partners to get an entry into the metaverse. It was the case few years ago, like 2-3 years ago. Now these partners are actually knocking on our door and they say, me too, I want to be part of this transition.
Your valuation is a multiple of a very serious number. Do you think it's really feasible to have such a multiple on revenue?
Yes. Current valuation may look high. However, if you look through our value proposition, we are actually making the best of the two worlds, the crypto and the financial regulated world. We have a license from the Polish regulator, from the British regulator to actually mint the national currency. This is a golden grail, if I may call it, for European Central Bank. The project, the CBDC project. So we have been presenting the experience in this project for the last 4 years. This value is not second to none. The crypto, however, world is seeking the ways to actually merge and do the joint projects with the traditional financial communities and institutions. We are making this possible through a very solid and trustful platform and the regulatory framework which is embedded into the technology. I think this is justifiable. If someone understands the potential, this is easily justifiable.
So my question is, around the sales cycles, how long it takes you to onboard them, and what the value of those customers is. Because with the names that I've seen there, I would have expected higher revenues. Could you tell us a bit more about that?
Yes, so about the revenue, we are at the tipping point where the revenue, recurring revenue is just about to kick off. The first recurring revenue we are booking from the first customers like Ergo Hestia for the last couple of months, if I may say. So majority of our revenue today is the implementation revenue, I may say, unfortunately. While this is the time when the recurring revenue is kicking off. Now, the time to acquire a customer, it used to be quite long because the innovation level at the customers was quite difficult to find. But now, since we have a good example of projects within so many different areas, and also the metaverse and the tokenized economy is being now the hype again. It is actually getting improved, and through the partnerships, our partners are driving our solutions to the existing customer, which is making it much shorter. I mean, I can give an example on the Raiffeisen project. The sales cycle was quite short. I must say it was around 6 to 7 months, but then the piloting time has taken more than 14, 16 months because of the regulatory challenges that they see in the match between what the framework is today in Europe. MiCA will help this big time, so it will facilitate this even more.
What is your take on the regulatory landscape? You mentioned MiCA, but sort of can you tell us about any potential other hurdles that you might experience? What sort of timelines are we talking about?
MiCA definitely has made a wonderful job for us because we have the requests from customers that are willing to tokenize gold, tokenize any assets, fund shares, this kind of thing. But also it is opening this possibility of bridging into crypto, which we obviously discuss with number of financial institutions today. So that is on this front, it is perfect for us. Now there is a second set of regulations which is linked to European Green Deal, if I may say, which requests pretty every company to report the CO2 emission and the impact on the environment. This is one of the projects that we have developed with our customer. This is immense, I must say, because if you imagine that every single company will have to count the entry of every component and product and count the outcome of its business, this is making this incredible. This is a set of regulations that is coming into force in 2023, 2025. We are getting ready for those. We are making project to actually tokenize the energy, electrical energy, green energy, and this is a wonderful project which we just started with the customer. No revenue as of yet. It's just a project which is starting, two months ago. So these are the two big regulatory areas which are making this tokenized economy in Europe coming to reality.
I still find it hard to understand what's your actual USP or what's your competitive advantage, because there's many companies actually trying to do exactly the same thing as you do. There's many blockchains. There's many products that are actually currently addressing what you are developing with your customers. So I would like to learn actually what's unique for you. Because based on what I hear is that you have plenty of projects that you are developing which are dedicated to each customer, but I'm not sure how they can scale outside the particular customer application.
Our technology and the combination of technology and regulatory is our unique selling point. A technology that has a last mile blockchain with a sovereign identity embedded, on-chain processing, all data and all documents processed on-chain, and the European regulatory framework embedded into the technology with the KYC and AML processes as being part of the blockchain smart contract. This is basically the unique selling point. I have no knowledge of any other similar blockchain which are looking at the regulatory aspects so closely or at all, I would even say.
See, I'll differ a bit with you, because when it comes to CBDCs, I mean, there's actually quite a lot being done in Europe.
Yes, true. But when you talk about embedding the mechanisms of regulatory requirements into the layer one protocol, I honestly don't know the blockchain platform that does it. I mean, lots of people do it on the API and high level, which is basically not making a revolution as you would expect. You would expect to have a blockchain-based one, let's say, not a hybrid car like, you have a traditional car and an electrical motor engine somewhere on the side, but you would like to have like a full. This is why the sovereign identity, the on-chain processing, and the regulatory processes into the layer one.
Jacek, I checked a little bit your LinkedIn profile and that of your CEO, and your CEO seems to be incredibly busy on many, many different boards. How involved is he actually in the business on a day-to-day basis?
Yeah, I'm 80% booked on Billon. I'm actually sitting in 3 different advisory boards of the different startups in cybersecurity. Cybersecurity is my kind of another love, and this blockchain is actually reversing the cybersecurity upside down. But it's my primary focus, blockchain.
And the CEO?
What do you mean, sis? My CEO, Wojtek?
Yes.
Well, Wojtek is as well. Is 80% booked with us. He invested heavily. I also invested, obviously, heavily in this Billon. Wojtek is, I would say, even more than 80%. He's now fully focused on fundraising and investment relation. He's now given up majority of his other work, but he's still sitting in 2 or 3 boards similar to me.
The moment of truth. Direct feedback from the jury.
Raising 10 to 20 it doesn't really sound really focused. And that's double the amount. So it's very tough to understand what exactly you're raising. And it should be connected to the roadmap, obviously. So between 10 and 20 is like a double difference. The multiples really look, as of today, very tough to achieve. You put a focus on the compliance with the regulatory, which is very important. But from what you told me, you have such a long sales cycle in regards to adoption to every single partner of yours. And this might be an issue in achieving fast and scalable growth.
When you don't achieve like scaling, you try different industries. So it is like slightly late stage when you need to decide where it will be first implemented. It is why I started from this question actually. So it is my feedback, which is not clear and need to be more precisely explained.
I still don't have a very clear commercial route here, to be fair. I understand that sales cycles are very long. I understand that you're on the cusp of getting to the reoccurring revenues. What I didn't get from the pitch is what the potential is. And I would expect it to be extremely high given how long the sales cycles are and that the product would be extremely sticky. At the moment, I don't see the go-to-market as particularly scalable. And I must say that for me, a big red flag would be to see the 2 main people of the business, or some of the 2 main people of the business, not being 100% dedicated to the business at this stage. I think that for me as an investor is incredibly important.
I like the space. I think it's clearly unsolved in the sense that there's lots and lots of players who are trying to offer their own solutions, but nothing that has become unified and scalable, stable, trusted by all the key institutions, the kind of infrastructure layer, connecting blockchain into the kind of real world for corporate world, and I think that layer does need to exist. I think the pitch right now and the team and the whole presentation comes across a bit like a big consulting job where there's the big targets, the big vision, but there's a lack of detail that makes it all believable, starting from the team where others have already commented, and going into the sort of more the product journey, the channels, the specific customers, the customer journey, and upsell within those customers. I think that's the piece that would really would help if you worked on that a bit more for your investigation.
I didn't see actually a solid scalable business opportunity, because it's as Mark said, it's more like consulting for me or agency work so far. I didn't see the opportunity actually to swiftly scale on what you're building today. The second thing, you were talking quite a lot about regulation, but what you failed to mention is the tsunami that we see within the crypto industry recently. I mean, I'm talking about FTXs and SBF. It's a tsunami for the entire industry. It will have a humongous impact on the regulations, and you haven't even mentioned a word about it, and it will have a big impact on your business, I think. So that's what I was missing, because what you could have said is like, okay, I actually see even bigger opportunity for us actually around regulations because of this, or just, for you to relate to it. And for me to be in the crypto and not really mention it, that's a big question mark.
I will be waiting only for one of the jury anonymous scores.
Participant number 3.
Hi, I'm Sandra Laska, CEO of Twinco Capital.
Sandra, such a pleasure to have you with us. Welcome to the Founders Games. It's time to see your superpower suit and avatar, which will take you to the Metaverse in front of the 5 jury members. We're all waiting for you.
"60 seconds, pitch starting now."
A trade financier for the better part of my professional career, I'm a firm believer that global trade can be an engine to inclusive growth. Twinco engages with large retailers to provide affordable funding to their suppliers in emerging markets, mostly SMEs. One of the biggest obstacles for SME growth is access to competitive funding, because banks focus mostly on financial data. Twinco, on the other hand, leverages on the relationships between buyers and suppliers. We focus on commercial and ESG data, and we combine machine learning and technology to better assess risk. So we provide liquidity early to buy the raw materials, and we are funding the full production cycle from purchase order to final invoice payment. It's a unique model that reduces cost and risk to both buyers and suppliers. With more than $100 million funded, 100 customers, and a presence in 12 countries, we are growing very fast and on track to better funding global trade.
Ready for Q&A.
Could you tell us a bit more about your financials? So things such as, CACs and LTVs, a little bit more around that, default rates, and how you also fund the upfront payments.
We charge a fee to the suppliers, and we are having that fund exactly on the basis of how long and how many days they get the funding from the purchase order to final invoice payment. We're charging, in the low double digits, which is very competitive to the type of funding that suppliers can get in your larger markets. While at the same time, because we are actually running performance risk on the supplier, so as long as they deliver, their big buyers are the ones paying us, we actually have a very low expected loss. We have had no default so far, and we have an expected loss below 0.25%. So you can understand that from a funding perspective, we have a very, very high value added from a double-digit interest rates that we charge with very low expected losses below 0.25%. And on the other hand, while we are building this very attractive returns funding business, we are also collecting a lot of data. So we use the data to assess the risk, but what we found out is because we are funding the overall supply chain, we are actually collecting a lot of very relevant data, both for the buyers and for the supplier. We We collect data on their commercial performance and how they're doing it with all of their purchase orders, how they're delivering, what's the quality of that. But we're also collecting data on where are their factories, who are their second-tier suppliers, how they're performing from a ESG perspective, and that provides an enormous value to both buyers and suppliers. So you're building a very strong network of data, proprietary data on the supply chain. Now, we always engage with the big buyers first, and through them, we get access to their overall supplier base. So our cost of acquisition of suppliers, or of customers, if you like, is actually relatively low. So you have a bit of a longer onboarding process for the big buyers. But then once we have that, we take a look at the supply chain data of those buyers, and we have a very quick, when I say quick, we take less than a week to actually onboard suppliers. And then those suppliers stay with us for the lifetime, so to say, of the recurrency of that production. So we have about 67% of suppliers that are with us, do 100% of their volume with those buyers with us, and we have a churn which is below 7%.
What do you expect from the disruption of global supply chains? A lot of us think that it will become a proximity economy, meaning that we will be supplying our needs regionally and locally rather than that internationally. At least these are some of the expectations. What would be the implication to your business of such a change?
From a business perspective, it actually is an opportunity. The model works, and the need to manage your supply chain and to provide liquidity to your SMEs is actually as valid for your suppliers in Bangladesh as it is for your suppliers in Southern Europe or in Turkey that are closer to you. From that perspective, the model works for SMEs around the world. You're actually leveraging that relationship and taking a different type and a different set of data. It says how well they perform and how they're producing their t-shirts rather than how big is their balance sheet and their profit and loss. And so that's what makes it a very unique tool to actually fund your suppliers and your diversified base of suppliers, whether they're a little bit closer or further away. Having said that, we do believe that, again, international trade is a motor for growth, and we are hoping that we can contribute to not going into the protectionism approaches that we have seen over the recent times, because actually, you have to do it properly, but you have to also build the tools and give the opportunities to emerging markets to participate in the global supply chain and to participate in the global economy from that perspective. So we think it's an opportunity, and it's also a way to contribute to a more equitative economic and inclusive growth, not only here in Europe, but actually elsewhere in the world, whether it's close by in Turkey and or a little bit further away in Asia.
What's your typical, are you multi-industries trading?
So, we actually, we started by focusing on the apparel industry. We have a very big focus. We have now, 4 large retailers and one which is a little bit less large, but on the retail and apparel industry in particular. Apparel has a very strong impact in emerging markets, and also from an ESG perspective, was an industry that was in dire need of supply chain management risk from an ESG perspective. So we started there. There's a very strong network effect in our business. So once we start funding one large buyer, the suppliers of that large buyer are, so we go to the suppliers through the large buyer, but then the suppliers, once they start receiving up to 60% of the purchase order value up front, they are the ones introducing you to their next buyers. And on the other hand, all of the risk analyses and our risk algorithms are very focus specific. So for example, on the ESG side, we strongly believe that actually to measure properly the risk and the impacts of certain suppliers and buyers in a meaningful way, you need to do it taking into consideration a specific sector. So it's a model. Our model works for other sectors. We're first focusing on apparel, We're working already with some of the leading companies in the apparel industry. Once we have transformed that, we will go to the next sector: automotive, electronics, etc.
Where does the capital come from, and how do you scale it to billions of dollars that you will need to have a sizable business? Number two, can you just talk about unit economics, at least in general terms? So with the low digit interest rates, what sort of margins are you getting? And three, who do you see as your today's competition and competition of tomorrow? How do you preserve that edge and secure a meaningful market share in the longer run?
From a funding perspective, we have from the beginning actually organized ourselves as, so we fund all the OPEX and CAPEX through equity, of course, and then through the actual purchase of the trade receivables, we're actually purchasing credit rights of these big buyers. What we do is that we raise debt. A part of that debt comes from our own equity, which is covering the first loss, and the rest comes from institutional investors. Now, to those institutional investors, what you're actually providing is a portfolio of which about 60% is accepted invoices from very large corporates. And on the other hand, the other 40% is a very diversified base of performance risk on suppliers. So if you think about it, you have a recurrent, short-term, trade-related recurrent asset base of 60% on actually BBB rated companies, and the rest has 40% performance risk, but very, very diversified. And you're actually offering anywhere between 6 and 8% today on that asset. And we are charging an average of 12 to 13% to our customers in that perspective. So, of course, with a 0.25% expected loss, the cost of funding, so that 6 to 8% does not reflect yet the risk that we're actually taking. It reflects the fact that we are a startup. As we build our book and we get to a book of 100 to 500 million, we can actually securitize these issue notes on this portfolio, and we are pretty confident that with a very low expected loss that we have, we can raise a lot lower cost of funding from that perspective. But already today, we are gross margin positive because of the margin that we're taking. From a competitive side, it's true that has been a lot of innovation in trade finance, but mostly of it has been in the tail end of the production cycle. So these are companies that do reverse factoring and that have done that better and better than banks through technology. We are actually the first company that has brought that to the next level, and we are finding from the beginning of the purchase order. The bigger we go in terms of scale and number of suppliers and number of countries, the more difficult it will be to actually compete with Twinco in that perspective. So that's why our focus is actually on growing the volume very fast. We already have only the 5 large buyers that we have today are buying per year $10 billion. So even only with the existing buyers that we have, we can now scale and grow very fast to achieve that critical mass that provides you a very strong capacity advantage and first moving our advantage in that perspective.
If you could tell us a bit more also about the team, actually about your co-founders and how big of a team are you today?
We are 25 people today, growing fast. We are 2 co-founders, Carmen, Marcin, and myself, and we have a management team of 7 people. Now, Carmen has a very strong experience in structured debt and equity, and we have also managed from a supply chain perspective to manage to bring on the ex-head of ESG from Telefónica, Arantxa Díaz-Ayado, while Mariano Klein has been our strategic technology officer, has been in Hart & Andersen, and has been a serial entrepreneur himself prior to these. We have not in this slide, but we also have people head of risk and head of data. That our head of data is a PhD in physics, ex-Ebury, and the risk director is ex-risk director at Santander. So we have a very experienced management team, and we're backed actually by very strong investors, Finch Capital in Holland, Money Ventures in Spain, and just very, very recently, Bona Capital.
The moment of truth. Direct feedback from the jury.
It's really wonderful to see a female founder presenting today. Sounds a bit cliche, but really great, especially in the fintech space. I looked at your team background. I think it's extremely relevant to what you're doing, so that's fantastic. I really like the business model from the perspective of ESG as well. I think especially those SME suppliers will benefit greatly from this. I think that my biggest concern would be around the financials, especially during this current macroeconomic climate, and obviously the debt facility that would be necessary to finance this going forward, and how reliable the models are when assessing the risk of those suppliers in the context of Black Swan events. So these were probably the two things that I would like to dig deeper into if we had a conversation one-on-one.
It's a huge area. Bringing other factors to decision making, anything from trade finance to other sectors, is a big opportunity. You've clearly built an engine that we didn't have an opportunity to talk about more, and that's where I would be very interested to learn more about, because that's the core differentiation and the edge. And it's imminently scalable. I mean, your key challenge is to get the resources behind the business and the scalability behind the business at match with the market opportunity, because if you don't do that quickly, others will move in.
Well, it is pretty clear business. It is straightforward, it is clear. The main point is also for me, like, concern always when you manage venture capital money and devs money. It is where that someone can eat your, let's say, ownership pretty fast. So, and from other side, their financial requires some kind of also tricky way to work with. So it is where I see risk, and so I see that your team is experienced, and especially for depths, you have even specialists who are running it. So by this way, possibly there's a way. But competition is competition, yes, in modern world. Since it is model clear, it is not something unique you can create. You just need to execute pretty nicely. So I wish you luck.
I really like what you're doing. From my angle, what I would like probably to learn a bit more is how you're building your competitive mode, and learn also a bit more about the team, but that's when we are one-on-one. And then maybe also to understand a bit more risks involved in the business, meaning how do you score your customers and the mechanism behind it. So that's definitely something I would like to have a deep dive if we were to have one-on-one.
I really very much like the approach. I like the boldness of the idea. I agree it's a straight business model, very clearly articulated and very clearly placed. You have to grow. You have to make sure that you are heavily funded, because this is a place that is governed by money. And you should be really well prepared for this, because it's going to be, and it is competitive, and it's going to be highly competitive. Now we are showing anonymously numbers and the 6 evaluation criteria only by one of the 5 jury members. And here we are with the 3 fantastic founders here with us on the stage of the Founders Games 3rd round, where we have the best of the best in fintech and DeFi. If I may speak on the behalf of all the jury members, this has been the most phenomenal scoring, in terms of high scores I have seen until now in the Founders Games. And we simply have a top mark, the highest ever until now given by a 5-member jury, which is great. And again, I feel very confident that we do make a lot of, value and bring a lot of value to the ecosystem by having great founders matching with phenomenal investors, successful investors, with this open and honest discussion while all of you around the world watching, learning, and at the same time supporting these endeavors, which are not only truly successful, but are generating societal and environmental change. And now, without further ado, let me start with the numbers. We have started with Pomelo, followed by Billon, and the final pitch was delivered by Sandra from Twinco Capital. Here are the results. Billon, 34 points. Twinco Capital, 46 points out of 60. And Pomelo, 49 points out of 60. Congratulations. Pomelo is the winner today.
And thank you very much. It was, first of all, it was a pleasure to be here, not a waste of time at all. On the contrary, I mean, we learn actually both from our fellow competitors, and congratulations, Gaston. It's also an inspiration to see companies that are, a little bit ahead of the curve, so we can, go looking forward to what's going to happen next. And from the investor's perspective, it's of course extremely useful to see, through their questions, where do we have to focus more when we, do our pitch or explain our business. Of course, our businesses are always complex, and we always struggle to fit everything in within, 1 minute or 1 minute answers in that sense. But it's extremely useful, and we always take notes because every pitch we do, every conversation that we have, helps us explaining our ideas better. And as we said, for us in particular, capital is a key lever, and therefore being able to explain that and explaining better and better is an absolute honor and privilege, if you like.
It's a great honor to be here. I thank you and the jury very much for your time, and also congratulate Acek and Sandra for inspiring stories and businesses. It's unfortunate that we cannot all win or make it through the next round, but truly deserved as well. And in terms of the feedback, I think it was very spot on. I agree 100% with the feedback. These are things that we openly discuss with our own investors and with the team. Investors, and in this case, the jury members, have the ability to see trends. They have a lot of very relevant experience, so it's very important for us to always be listening and learning and stay humble, and they make the necessary improvements and adjustments to read the situation and sort of optimize for our respective businesses. So I truly appreciate the feedback, and thank you once again. I had a lot of fun.
I'm very proud that I'm done into this quarterfinal. Such a company is a wonderful company. Congratulations, Gaston, for winning. You're doing an exceptional job in Latins, and the impact is huge. So congratulations one more time. I must say that I appreciate a lot the feedback. The feedback about focus is the most important to me and to us. Focus for this type of business, a platform play in blockchain, is a huge challenge. We see demand from all around the corners, and it's difficult to pick up on the best ones, but we will do our best to actually focus more than we do today. And one more time, we are in the tipping point currently. So I hope that we will see around either in this metaverse or in reality pretty soon, because this area is definitely a growing area. I encourage the founders to actually join and try to qualify into this stage. Thank you so much.
Thank you, everyone. That was the FinTech episode of Founders Games.